Welcome back. You are watching Metropole Television. This is your sector trends. Now, the quarterly survey of partners and directors of the active private equity and development finance institutions, so DFIs, in East Africa, done by advisory firm and Burbidge, shows that the investors are concerned about the possibility of overpaying for low-quality assets due to overvaluation. The respondents interviewed doubted the valuation environment for privately held companies, with the major questions in the segment touching on the perception of reasonableness of valuation or asking prices and the fairness of market pricing, including that of other bidders and the availability of high-quality assets in the market. With the COVID-19 pandemic still eroding asset quality in different sectors of the local and regional economy, how does a small-scale investor navigate the investment environment? Joining us this morning is CFA ERICK MOKAYA, CEO, MWANGO Capital. ERICK, good morning, sir.
Good morning.
Happy to have you around.
Happy to be here also.
So let's begin investments. That's exactly what we're talking about this morning. But somebody will ask you that 2020, we do know exactly what the COVID-19 pandemic did to asset quality. Is that the same trend that we're seeing in 2021?
I think with 2021, what you're seeing is a recovery in terms of some of the assets which are affected. I think globally, you can see like some of the institutions and places which are affected, like travel and tourism, they are slowly recovering, and maybe in some pockets of the market, you can say that assets are overvalued. But presently, as it is, I would say also there are pockets in the market where there is also, you can find good assets which are trading below their their normal value, so you can get good discounts on some of the markets that are there. So I think you just need to look in specific areas, not generally as a market.
Yes.
I would say there are concerns, like I've gone around in terms of real estate. I think some real estate properties in Nairobi are actually valued as highly as in Sweden. So that makes me a bit worried when you have a similar asset like in Nairobi and in Stockholm, which are valued at the same level, yet the income is quite different in those markets. Almost, I think the Swedish, comparing the Stockholm to the Nairobi income, that would be like 10 times difference, but the asset prices are the same. So it makes you a little bit worried about, say, pockets of the market like real estate. But generally, when I look at the stock exchange, you see like there's lots of companies there which are undervalued. They would say a company like Centum is trading way below its net asset value. So you have companies like Safcom which have gone into Ethiopia. There's risks that is being maybe priced in by investors. Maybe that's why it was down yesterday. So I think you just need to look at different places, different pockets of the market to see where good assets are that you can own, high quality assets that you can own at the cheap, and then wait for them to recover as the trend kind of, and let the trend be your friend.
Pretty much, isn't it? So I saw that report by and Burbidge was saying, well, when we look at assets in the region, the main concern is that they might be overvalued. Do you share the same sentiment?
As I said, like, I don't think all assets are overvalued. I said there are certain pockets of the market, like I just said about real estate, where you could see concerns about valuations. But generally, I think assets are fairly priced. There are certain pockets of the market, as I said, where you can find good value for yourself. So you just need to look a little bit deeper. Of course, do comparisons with other markets, do comparisons with other stocks, do comparisons with industry peers and sector peers, and then you can also say like, okay, well, this part of the market is actually overvalued or not. But I mean, it's hard to make general sentiments about the entire market. But globally, as you can tell, since March 2020, when there was the pandemic hit really hard and markets were down almost 20%. Then since then, the markets have recovered, and I mean, you can see like companies like technology companies around the globe, they're really highly valued. So then like those places, you can actually say, okay, this is actually highly overvalued, you could say. But it's really hard to actually state that categorically that things are overvalued, everything is overvalued. There's always something you can find in the market.
You can actually find in the market, isn't it? So when you saw the effect of the pandemic, I mean, the whole idea in 2020 was run to the safe havens, whichever way you can find them. Even the definition of a safe haven actually did change in 2020. Is that sentiment now changed? Because you might say the markets are recovering, but then some people will say this is when the effects of 2020 are now getting felt in majority of the markets.
I would say globally, because of some certain actions that maybe regulators, especially like the Fed, have taken in terms of pouring money, in terms of stimulus into the economy.
Yes.
Globally. You could tell that there are places, like places which you used to think were safe havens, now kind of people moved away from that. You have to go and invest in stocks. You're pushed to invest in stocks because bonds are maybe yielding negative rates at the end of the day.
Yes.
And after inflation, especially now that inflation is ticking up, then the real returns are actually pretty low. So you could say that in terms of the perception of what is a safe haven, it's changed last year. But I still think, like, I mean, as the markets continue to recover and as everyone keeps saying that there would be a crash in the markets and all, you still think that maybe the safe havens are just being in stocks, and also maybe being in the government bonds in Kenya. So that's where, I mean, they're giving you 12.7% on an IFP bond. So that's pretty interesting.
Yes.
At 12.7%, and then you have inflation maybe ticking at 6%, you have a 6.7% real return at the end of the day. So that's good for you as an investor. So I think for the Kenyan bond market, that's a kind of a safe haven. But also that should worry you in the sense that the government is borrowing like crazy currently.
Isn't it?
And then I think as maybe the top business news yesterday was about the government maybe borrowing from the IMF and actually now paying China. So it's like kind of robbing Paul to pay Peter kind of in a situation. So that should get you worried. But generally I think bonds in Kenya kind of, they feel very safe presently.
Pretty much. So when we taste that we're going to have you here today, the first question is this: for a smaller investor who wants to grow their investment portfolio in the Kenyan market, where should they begin?
I think the best place to start is in stocks, and think of stocks as portions of businesses. So if you look at the whole business as maybe a piece of a huge piece of ugali that you have on the plate, and then you cut them into small pieces, then a piece of that ugali is actually a share in that company that you're owning. So if the company is doing well, then you get to do better also at the same time. So for the small investor, I would maybe have a look at the Kenyan stock market, select a few companies with the help of maybe friends and also financial advisors, and see and hold that for the long term. I pretty much feel like a lot of the companies in the stock exchange are not properly valued. Maybe because investor sentiment is quite negative presently, but there are good places in the stock market to get good value for yourself. But also at the same time, also there are good dividend payers, say Safaricom, who are consistently paying good dividends. Some banks also paying consistently good dividends. Some stocks like Akuzi, if you can find them, I know like they are pretty low liquidity levels on that. So if you get them also, you can get in. The key for the retail investor is get in somewhere, invest for the long term, and just let a trend be your friend, so you can keep growing over a long period of time. So I think for the retail investor, don't be worried. Get in, buy a few shares. It's 100. You can only buy a minimum of 100 shares. So get in a share maybe trading at 4 or 5 shillings. Maybe it's Scan Group or something like that. Get in. Put in your 500 shillings and let it grow pole, and then from there I think you can take over from there pole.
Isn't it? But I want to take you back again. I like the way you're saying that stocks would look the best way, the best entry point for a small-scale investor who wants to keep on growing their portfolio. But the conversation, even from 2019, ERICK, all the way to 2020, is that the equities market in the country was actually quite suffering. So for someone who's looking at that headline, then would you say that you want to get into that space as opposed to looking for options elsewhere? I mean, we have government short-term bonds that are really giving you a very good return. Would that not be a place to start, probably as you look to get into the stocks?
I mean, I would say that when the stock market is down, that's actually the best time to buy. So right now, when the stock has been beaten for the last 5 or 10 years, I would say that that's the best time to actually go in and check out a few stocks. As I said, not all stocks are doing badly, and not all stocks are overvalued or undervalued. You just need to look in specific places and see. But as you say, it's something that you said earlier about the bonds. I think I would agree with you that bonds are good places to start. But remember, a bond, you also need a minimum investment of around 100,000 for some of the places. 50,000 or 100,000. So I think if you don't have that much money, I think for the small investor, then start with the stocks. But if you have money that is above 50 to 100,000, I mean, put it in bonds and let them grow. So as you can see, bonds, as I said earlier, they are earning above the inflation rate. So you want a real good, real return.
Yes.
So I mean, that's a good place to put money in. But again, be worried about the Kenyan government and their borrowing rate. It's a bit too crazy right now to be, like it can affect the country. And maybe, who knows, there could be a default or something like that. So I think that's the real worry with stocks.
Yes.
But as I said again, generally, for every place that you're investing, you should be looking at the risk-return trade-off. So for stocks, they're risky currently, but the return can be high if the stock market recovers well, especially going into an election year next year when there's a lot of also issues. Hopefully the people who take over also kind of boost the stock markets. We haven't had companies maybe doing IPO,
yes.
so we need more companies. 65 or so companies is pretty too low, and some of them are not even trading. Yeah.
Yes.
Some of them are not even trading, so
yes.
I think we need more companies. But for bonds, it's a little safer. But you get a good return of 6.7%. So I think, and that's why maybe all the banks in Kenya are actually increasing their the amount of money they're investing actually in bonds,
yes.
in government bonds,
yes.
and not actually directly. Instead of lending to businesses, they're actually lending to government a bit more. So it's a little bit of a worry there. But for the retail investor, if you do have enough money, 50 to 100,000, put it in bonds. Yes. But also remember to diversify and also put it in some stocks also.
Pretty much. All right, just another direct question as well. As a small-scale investor, do I get a broker just to do for me the business, or do I learn investing by myself, open an account, and chart my way upwards?
I mean, the two ways to look at that, I think first of all is if you have the time to spend a lot of time in the market
yes.
to understand companies, then invest directly.
Yes.
So I spend my entire day, 24 hours, thinking about stocks.
Yes.
So I don't think I need a broker myself to advise me on what to invest. I listen to them, I see what they're saying, and then I go do my own due diligence and research. But maybe for the small investor there, you have your full-time job and you have a family at home, you do not want to be spending the whole day, looking at stocks and all. If you're pretty confident, if you're not confident in investing in the markets, get a broker, of course, and get their advice, listen to them. But also at the end of the day, still make your own decision about where you want your money to be invested. If you're also investing globally, invest in index funds. That's like where you buy an entire stock exchange instead of now being worried about individual stocks.
Yes.
So you're fully diversified over a portfolio of, say, 30 stocks, 30 to 100 stocks. So you'd never have to worry about that. In the long run, stock markets always, like in the end, they actually do go up. Maybe if it's not the Nairobi Stock Exchange at least, which has been affected. So, I mean, that's what I would say. Like if you have the time to invest in learning about stocks yourself, invest and hold for a longer period of time. But if you don't have the time, use the financial advisor, but a trusted financial advisor also, because yes. some of them can also be misleading. So with a pinch of salt, take the advice also.
Pretty much. All right, Eric, I just want us to touch closely on what is happening in the international market right now. There are fears that the market might crash. Well, there are two sides to that conversation. I would want to hear your side as well. But then talk about that in relation to the recovery of the dollar. There are also these conversations that now the Fed might actually want to improve those interest rates. What impact is that going to have in the international market?
It's a very good question that you ask, because I spend a lot of time, especially with the international markets, because yes. it affects almost everything. Like the US market is like the market around. So I would say, in terms of investments globally and people being worried about crashes, I would say I take some time to actually look at from 2016, 2015, when I started like investing small scale in the international markets. There's always been an investor who actually says the market is going to crash. So there's one person for 2 or 3 years I was listening to them.
Yes.
And for me, I thought the market is going to crash, so yes. I always kept my money away from investing.
Yes.
But then the market never crashed. It
yes.
did crash, but not because of the reasons they had suggested. It was mostly because of COVID.
Yes.
But then quickly after, it's recovered, and it's up maybe, I think, 2x since, I think 1x up the global stock exchange markets. And a lot of stocks are actually up from the March lows last year. So I think like you do not want to spend your time crying about when the stock market is going, or hoping when the stock market is going to crash so that you can buy. The problem that happens is when the stock market crashes, everybody runs away, and then you don't have even time to actually go back and invest in those stocks that you wanted. So I think stay invested. Don't wait for more stock market crashes. If they happen, it's okay. If you're a long-term investor, you don't worry about what is going to happen today or tomorrow.
Yes.
You just let the markets do what they do, going up and down every day. So like yesterday, the Nairobi Stock Exchange was down. You don't care about that if you're a long-term investor. It's like yesterday it did, but since May it's been up. So what do you want to be? You don't want to spend your time like worried about where the stock market is going to be. So about the Fed, I would say the Fed is a big player. They own a lot of securities in the markets. The interest rates are likely to go up from what I read because the inflation is going up, and so they have to raise interest rates to kind of temper down the inflation. But again, I also don't spend a lot of time trying to read the macro. If you're an investor, just stay invested in the stock market. Whatever the Fed does today or tomorrow shouldn't really worry you.
Yes.
There are people who do that for a living and maybe try to trade a few basis points. But I think for the local and a small investor, don't worry about the Fed too much. Just stay invested and enjoy investing at the end of the day. Pretty
much. Now, I got this question for you, and it was actually one of the most important questions that I had for you this morning. We were looking at the NSA, that some two stocks that have been running over the past couple of weeks. One, Nairobi Business Ventures and WPP Scan Group. Let's begin from WPP Scan Group. I mean, this is a company that came in and gave us an operating loss for the year. For the year ended 2020. I mean, it was close to 1.7 B. Good. But then Deloitte, who are the independent audit firm in those results, said, we cannot give you a substantial statement for these results because we do believe that the way these results have been computed, they're in contravention of IFRS, standards of accounting. So they didn't give us a substantive result. But then ERICK, they've been running on the NS. If you look at the trading volumes that are actually putting in by the day, they usually end among top 10, top 5. I mean, you're gonna find them there. Why that? Why is that negative sentiment not affecting trading on NSA?
Markets are pretty strange, I would say. But generally, I think what is happening, especially with WPP Scan Group, is investors for a long while have been worried about what is happening. They didn't know exactly what is happening behind closed doors. And for a long while, you could see like the report for 2020 was delayed by, I think, from July. It was released the end of August. I think that's pretty unusual for stocks, but I think the stock rallies because mostly investors are breathing a sigh of relief that things were not as bad as they expected. The expectations are things would be pretty bad. There would be some maybe allegations of issues that may have happened within the stock. But I think once that was cleared, and then they're like, oh, people can breathe a sigh of relief, and then the stock can actually go up. So I'm not surprised by the rally. I'm just a bit surprised that they also have issued again that the first half reports will also be delayed by a month. So I think that also worries you. But also the qualified report by the auditor, that should worry you a little bit. But they are trying to resolve the issues with the subsidiaries. I think it's something with 5 subsidiaries where they can't be able to do a proper accounting on that. That should be resolved, and it would be really interesting to attend maybe the annual general meeting to see what they're going to say about that. I mean, it's really hard to understand what exactly happened. There are a lot of people who are not speaking about what really happened with the ouster of the former CEO and the issues surrounding that. But I think the report that came out actually vindicated the former CEO.
They absolved the CEO.
But still, we don't know what's the real issue. Maybe the issues are with the subsidiaries, but I don't know exactly what issues the subsidiaries have. So the hope is that in the near future, there will be resolution to those. But I think also, like from what I checked last time, they have cash around in the company itself has cash on the balance sheet around 9 per share. And it's now, at some point it was trading at almost 4 shillings per share. So it's trading way below the cash on the balance sheet. So I think that's maybe what investors are looking at, hoping that they can also pay dividends at some point with that amount of cash that they have on the balance sheet. So WPP shouldn't worry you too much. I think I would really want to know how they get to resolve the qualified opinion. My bet is that the reason why the report was so delayed was the auditor wanted clarifications. And even to date, after reading the annual report, I think they haven't yet resolved a few issues here and there. So it's a worry, though, that a company has a qualified report and it's a listed company. So it's it's pretty tricky.
Isn't it? Yeah. All right, so we cross over to Nairobi Business Ventures, another one that has been running as well. Well, they got acquired up to around 84% acquisition from FZD, Dubai, isn't it? And then they announced that they're diversifying their business portfolio. They want to get into cement manufacturing, airline management business, and that seemed to excite trading at the NSA. Is that a stock? Well, they're trading quite low. Is that a stock that I can put my money in now?
I wouldn't put my money there because I do not know what exactly they're up to. So I know they're doing a lot. They're trying to resolve, and they're becoming like the Kenyan Spark, like
yes.
that. Just it's a shell company maybe that buys properties here and there and businesses here and there and tries to acquire them and maybe change them and then maybe sell. I think they're trying to maybe even do a cement manufacturing company somewhere
yes.
in Machakos, I think, last time I checked.
Yes.
So I think the rally around Nairobi Business Ventures was the best performing stock at the Nairobi Stock Exchange in the first half of the year. So that was really surprising to me.
Yes.
But I would say like that could be just people maybe speculating. I don't know. I haven't checked the volumes, but there was a pretty strange movement of volumes at a particular date. I think there was a week before they announced that they are going to do 4 acquisitions.
Yes.
Someone made a big purchase, and then I thought like that there's pretty much something there that has to do maybe with insider trading. I don't know. But hopefully, I don't know. With Nairobi Business Ventures, I have no idea what they're doing. So I would only put a wait and see approach.
Yes.
I do not think that the rally in the stocks was supported for, especially that stock was supported by fundamentals going up
yes.
or anything changing at the end of the day.
Pretty much. All right, let's clear like this in just 1 minute because that's the only time that we have left. Somebody wants to know how they can get in touch with you, what you can do for them in terms of the investment journey. And quickly, within that 1 minute, I don't know whether you're going to be able to manage it, what stocks are your go-to places on the local books?
So to get in touch with me, I'm available on Twitter, EK and also you can drop me an email at ekmokaya@gmail.com. I work with MWANGO Capital mostly, so you can also drop us an email at hello@mwangocapital.com. We are also on Twitter at MWANGO Capital. So you can, what we do is mostly we try to maybe digest information about markets and then disseminate it to retail investors. So we've grown our readership from around 20 followers to around now 7,000 plus, and we're really growing really fast. So really excited about the team I work with at MWANGO Capital, and really kudos to them to what they're doing. So about stocks that excite me currently, I look at boring stocks like Centum. I look at Kenya Re. I also have a look at maybe Stanchart.
Yes.
I'm interested in Safaricom and their venture in
Must
in
you have
Ethiopia.
Safaricom as a retail investor in the country?
I think it's such a big part of the stock exchange that you can't avoid.
Can't avoid,
It's 67% of the
Yes.
market, almost 70%. I think you really can't avoid having a little bit of it.
Yes.
But I'm not so sure if the stock is going to do well, especially given the huge risk they've taken into Ethiopia. But it's a bold move. It may pay off. Those are the kind of moves that pay off and pay off well. And if they pay off badly, well, it's just a write-off, and then you move on to the next thing.
Fantastic. ERICK MOKAYA, we could go on and on and on. 24 minutes is not even enough. All right, a lot of things to talk about investments. No, you hear him, but you want to get in touch with him. He's giving you your details. But you can also talk to us here at Metropole TVKA across your social media platforms. We give you a direct link to them as well, so they can give you those tidbits as you get to that retail investment level. You hear him. He can tell you why he's looking at those boring stocks. My name is Simba Elijah Charles Kiago. We take a short break. Once we come back, your official economic review.